Hello everyone, welcome to this webinar from ESS Small Business. I'm Peter Towers, Managing Director of ESS Small Business and ESS BIZTOOls. I hope you're having a great day wherever you are around Australia. Today we're going to look at crowdsourced funding equity raising from a small business operators or a medium-sized enterprises point of view. So you might be a director, a manager, a shareholder, or even a small business owner who's wanting to know what this talk about being able to raise capital is all about. Hopefully I'm going to be able to give you an insight into all of these matters in this presentation today. Some of your competitors may have an advantage because 44 companies around Australia have already been able to raise $37.5 million utilising the crowdsourced funding equity raising process, which became legal for proprietary limited companies from the 19th of October 2018. So in all, 31,000 odd investors have contributed $1,207 each. And approximately 30,000 of these investors were what the government calls mum and dad investors, so people who are not sophisticated investors. Sophisticated investors are people who have got a net worth of at least $2.5 million, or in the last 2 years earned gross income of more than $250,000. and who are able to produce a certificate from their accountant verifying that they meet the classification of a sophisticated investor. Now, there's many sophisticated investors who don't publicise that fact, so they never produce the accountant certificate. Anyone who hasn't got that accountant certificate is then called a retail investor, and that's generally known as mum and dad investors. With crowdsourced funding equity raising, there is an upper limit as to how much money a retail investor can invest in one company in a 12-month period. And that amount is $10,000. So you'll see the average investment of $1,207 was considerably less than the upper limit figure of $10,000. So I think some of these companies who have already embraced the concept of raising capital, and they may be going to try to raise some more later in the year or next year, do have a market advantage if you're in the same industry as they are, if they are your competitors, because they have now attracted a whole range of people who will become their customers, because that is one of the real areas that crowdsourced funding equity raising companies do work on with their investors. They make offers to their investors, they encourage them to become customers, advocates for their businesses. This is an alternative to borrowing money. If you've tried to borrow money recently, you'll know that it's fairly difficult since the Banking Royal Commission. And you might want to borrow money for a business expansion, but you'll need security. Your directors and sometimes other shareholders will be required to sign personal guarantees. And the company then has to agree that it's going to pay a monthly principal and interest payment. You don't need any of this if you go down the path of crowdsourced funding equity raising. Admittedly, you're going to have to allocate a percentage of your shares to an external investor or investors, which would be normally the case if you're going to use crowdsourced funding equity raising, because you might have 500, 600, even 1,000 new shareholders. Think about them all being potential advocates for your business and customers. And you can get a share registry organisation to attend to the maintenance of the share register. You don't have to do that yourself. So is this the same as crowdfunding? There's a lot of confusion out in the marketplace as to what's crowdfunding and what's crowdsourced funding equity raising. I think it's a shame that the government didn't choose a slightly different terminology to describe crowdsourced funding equity raising, because crowdfunding as a concept has been around in Australia for at least 10 years, and that name is fairly well known. So it's not the same. Crowdfunding is a legitimate activity that's normally conducted via social media to raise money for a charity or for a family that might have some financial difficulties through an accident or through a death and there's a funeral to be paid for, or there's some medical expenses that the family cannot afford to pay. And some startup businesses have utilised crowdfunding to raise money to complete a research project that they've been working on. So there is a legitimate role for crowdfunding, but it is different. However, there's virtually no legal protection for a person who donates money via crowdfunding that your donation is being used for the purpose that the crowdfunding appeal was conducted for. And I suspect that at some time in the not too distant future, governments being governments will try to control crowdfunding. And I imagine that would be a state government responsibility. So that will be interesting. Crowdsourced funding equity raising is covered by the Corporations Act, which is obviously administered by the Australian government. And it is strictly controlled by the Australian Security Investment Commission, who have appointed businesses who are known as crowdfunding intermediaries. Those businesses all have an Australian Financial Services licence, and they have been given a special endorsement to be crowdsourced funding intermediaries. There are currently 15 of those intermediary businesses operating in Australia. 8 of them are in Sydney, 2 are in Melbourne, and the others are scattered around Australia in Gold Coast, Adelaide and Perth. What an investor receives when they invest in a crowdsourced funding equity raising company is a share certificate for the number of shares, the ordinary shares. They must be ordinary shares under the legislation, and that's what they receive, a share certificate based on the investment that they have made in the company, which they've now become a shareholder. The shareholder is entitled to receive a share certificate, which would normally be produced by the advisors that have been appointed. They'd also be able to access the annual financial accounts directors report that the company directors would have uploaded to the company's website, and they are able to attend the annual general meeting of the company, which is normally going to be conducted via the internet, digital technology. But they don't get anything else. They've got no day-to-day say in how the business is going to be operated unless they happen to have been appointed a director. So why would you be interested? Let's look at the general legal requirements first of all. Is your company a company with a turnover, a gross annual turnover of less than $25 million per annum? Does your company have gross assets on a group basis of less than $25 million? And you have to be able to confirm that your company is not registered on a stock exchange anywhere in the world. Now, they're the basic tests. A whole range of companies will pass those tests. And if you pass them and you decide that you want to go down this path, you could in fact raise up to $5 million per annum for your company. Now, only a few companies have currently raised the full $5 million in Australia. In fact, the average capital raise by those 44 companies is about $860,000. There are quite a number of companies who have raised less than $500,000. There are some companies which are now going back to the market for a second tranche of capital raising, because they can do that if the intermediary approves the updated crowdsource funding offer document to go back to the market, as long as their gross capital raise in a 12-month period is less than $5 million. So would the ability to be able to raise some capital help your company so you could implement the board of directors' vision or senior management's vision for your company? One of the problems with visions and scaling up or any of those processes, you normally need cash. And sourcing cash in this current climate in Australia is rather difficult. Crowdsource funding equity raising could be a great way to secure it. So what type of companies might be interested? You might be sitting back now saying, oh no, this is really not for me. We wouldn't meet those classifications. We're not aspiring to be a listed public company. Well, you don't have to be. But you might like to scale up, and scale up, say, terminology that's been given to a company that looks at where it currently is and sits down and thinks about a 3 to 5 year vision. We're currently got a turnover of $1 million. What would we like to have in 3 to 5 years' time? And that might be $4 million. The problem with that is that you are going to need to have cash available to fund that business's growth. Because as you grow, you will need a greater investment in debtors, because you're going to be doing more sales. And if your customers are paying you 75 days, that amount of money is going to build up. And whilst you might have a corresponding build up in your creditors, the amounts that you owe, some of your creditors may have put you on 7-day payments or 30 days payments and they strictly police them, or a fair bit of your expenditure may have to be paid out in wages, which normally means that that cash outflow occurs every 2 weeks. So companies find that as they grow, they need more cash. You might have to invest more money in your stock if you are a business that carries stock, because as you grow, you'll need more supplies ready to be able to immediately send to customers. Or if you're a tradie type business or a professional type firm, your work in progress will also increase. And you may also have decided that you need to undertake a large-scale research and development project. You might be going to spend $500,000 on that. Where's that money going to come from? So there's some of the ways that a business that's wanting to scale up, to get a bit bigger, might think about, do we want to seriously look at trying to raise that cash as a crowdsource funding equity raising company? Alternatively, your company's vision may be you want to acquire another business. How much is it going to cost? Where are you going to get the money from? What assets are you able to mortgage? Your directors might be keen to expand into other areas. And again, magical word, isn't it? Cash. Where's it going to come from? Or your CEO might have a big, audacious idea, which makes sense, but it's going to cost money. Could be something that, if it can be documented so that potential investors will get excited about it. They'll say, yes, we can see what the end result of this could be. We'd like to be part of it. We'd like to invest into this new company. I've talked about research and development projects. When you've finished a research and development project, and those of you who have undertaken research and development projects, I'm sure you'll know what I mean. You finish the project, you get a patent registered, you're ready to go, and then you suddenly realize you've now got to get this new product or service that you have developed at considerable cost, has now got to be introduced into the market. And that's called the commercialisation phase. The federal government realises that this is an enormous cost. That's why they have a $1 million grant program called Commercialising Technology to assist the accelerating of the commercialisation process, because it does cost a lot of money to take a product from the final prototype stage to having it being able to be delivered to customers. There's a lot of work in between. So that might be the cost that you're looking at and saying, how are we going to fund that? It was a good idea to do the R&D, but now we've got this huge cost. So for each of these items, and there are a few others, I just wanted to share those ones with you today. Crowdsource funding, equity raising could be the answer to assist your company. So you might be sitting there saying, well, where do I go from here? He's created some interest. We might like to do something here. Well, I think the first step is you need to find out how crowdsource funding equity raising operates. I'm giving you an overview here today. Now, your accountant might be able to help you with an understanding of how crowdsource funding equity raising operates. But if your accountant is only interested in preparing income tax returns or is flat out now processing tax returns, they can't spare the time to research crowdsource funding, don't worry, we have accountants all over Australia who subscribe to our products, who have been through our training services, who we could introduce you to assist you in this process so that you could get a complete understanding of what crowdsource funding is all about. But one of the key objectives, once you've been through and you've got an understanding of what's involved, and once you decide, yes, I'm interested in going into the next stage of all this, and that is to get your house in order. Because you need to, first of all, identify what your company's vision is. This is going to involve a group discussion of your directors, your senior leadership team, and your other team members, and your accountant, who should work through where you are and what you want to achieve in your business. And the sort of items that are going to be generated from this process include the business plan for your company for the next 3 to 5 years. Where do you imagine going, especially if you're able to raise $1 million, $2 million, $3 million, or even $5 million from the market? What would you do with that money? How would you invest it in your business and generate activities which would create profits, which ultimately would enable you not only to pay tax to the federal government, but also pay dividends to your investors, to your shareholders. And as shareholders, your current shareholders would also be in receipt of those dividends, of course. Once the business plan is finished, the budget and cash flow forecasts can then be prepared for the next 3 to 5 years. If you don't have a group called the senior leadership team, this would be an appropriate time to form that group, because investors are going to be very keen to know who the CEO is, who the marketing manager is, who the sales manager is, who's in charge of production, who's the accountant, who's the chief financial officer. It's also very desirable to analyze your customers. Who are they? Where are they located? How much do they buy from you? How often do they buy? What gross margin do you make out of sales to individual customers or in individual areas, or indeed in individual countries? Because the directors and management team need to understand this, because you could get asked some questions about that in this capital raising process. Now, your accountant or an accountant that we can recommend to you has an important role to play to give you an overview of this crowdsourced funding equity raising process. This is a detailed overview now, so you clearly understand what's involved. And one of the key aspects is to give you a full rundown of what the duties, responsibilities, and powers are of the crowdsourced funding intermediaries. These are these 15 businesses that have been appointed to this position by Australian Security Investment Commission. Now, each of those 15 intermediaries are different. They're located in different cities. They have different ways of going about performing their tasks. They're not all identical. And some of them have decided they're only going to specialize in specific industries. So we have one for the medical and scientific industries. We have another one for farming activities, not actually growing crops, but supplying resources, technology to assist in the growing of crops. We have others that are interested in the solar energy devices, and they are saying that it's only in these particular industries that they are going to invest. So once your accountant or advisor has given you a rundown of the intermediaries, you'll be in a position then to have a meeting, or perhaps a Zoom meeting if you're not in the city where the intermediary operates from, to be able to have some dialogue with them, to try to understand whether they've got some empathy for your position, for what you're trying to achieve for your business, because you're going to have to work very closely with a team from that intermediary. And always ask to talk to the team members and whoever's going to be the team leader, if you appoint that intermediary to be, in effect, the capital raiser for your business. But you also need to appreciate, and your accountant will take you through this, that your intermediary is wearing two hats. First hat is that the intermediary is the gatekeeper for this legislation. That's the wording that the current Prime Minister, when he was the Treasurer, Mr. Morrison made those comments that the intermediaries were in fact the gatekeepers for ASIC. They have to check that you've complied with the legal requirements. Your documentation doesn't have to go to Australian Security Investment Commission before you can raise capital. You send some reports to them subsequently. The adjudicator as to whether you have complied with the law is the intermediary. But the intermediary has another hat, and that is that they are a promoter, because each of the intermediaries has assembled 25,000 to 50,000 potential investors that are on their database. And these are people that they're going to communicate with once they have approved your document, which is called the crowdsourced funding offer document, to be uploaded onto their website. So they wear this dual role. They're both the referee, but then they are a very keen player in this overall process. So what role can your accountant or an accountant that we suggest to you play? Obviously, assistance in the preparation of that key documentation, the business plan, budgets and cash flow forecasts. But the company will also need a valuation to be prepared so that you can decide for $500,000 what percentage of the shares are going to be allocated. And this will then contribute to the determination of the share price that the new investor is going to be asked to pay for. And the share prices that the 44 companies who have raised money so far varies from, I've seen 21 cents and I've seen $10 a share, just the price that's set by the company. But the important document is the crowdsourced funding offer document. This is the de facto prospectus. And this is the document that the intermediary has to check. and make sure it complies with the law, because there's a lot of disclosure about your company, about your directors, about your senior managers, and then about the business. The document also requires very prominently to have the government's investment warning about investing in these types of companies, which have not gone through the process that you would have had to go through to become a listed public company, an IPO, initial public offer. It costs a lot of money, an IPO, and you're not going through that process. So the way the government's trying to counteract that is to make sure that a very straightforward and fairly hard-hitting investment warning is available there to shareholders or potential shareholders. So once the crowdsourced funding offer document's finalised and the board of directors have signed off on it, it should then be sent to the intermediary. Hopefully the intermediary has been kept informed as this process has been undertaken, and they are then happy to upload that offer document onto their website. They will immediately send emails to their database, and they will authorize the company directors and senior managers to conduct some investment seminars, normally with the intermediaries firm being represented at them. So you can talk to your fans, your customers, your employees, your suppliers, your family, friends in your local area. And the intermediary normally runs functions in the city that they are located, because a significant number of their registered potential investors are located in that city, so they can attend. So there'd be an expectation that some of the directors are going to be available to attend those functions, because this is the big promotion. Now, that offer document can be listed on the intermediary's website for a maximum of 90 days. So it's very important that everything happens like clockwork. What should you do? I think, first of all, you should be very happy and celebrating that crowdsourced funding equity raising represents the biggest change in the last 35 years for the financing arrangements for small businesses and medium-sized enterprises. You might ask, what happened 35 years ago? The government of the day introduced Section 708 to the Corporations Act, which enables a private company to be able to raise up to $2 million in a 12-month period from a maximum of 20 investors. That section's still in the legislation and it's still used every day. And indeed, in the capital raising that your company undertakes, there still might be a component of the funding that is raised utilising Section 708, and that will come out in the discussions relative to your own particular business if you are interested in proceeding down this path. I think you should be arming yourself with information, though, as directors or senior managers or shareholders, or indeed as someone that currently owns an unincorporated business and you're thinking about the future. What could you do to grow the business? To do this, of course, you've got to incorporate as a company. So please talk to your accountant about doing that. So that you would develop a wide knowledge of everything to do with crowdsourced funding equity raising, so that you can use that for the benefit of your business. ESS BIZTOOLS is a range of articles which we have prepared targeted at directors, senior managers, shareholders and business operators of small businesses and medium-sized enterprises, so that you can gain good knowledge of how this process works. To access these articles, some of which are free, some of which have fees payable on them, why not go to www.esssmallbusiness.com.au, crowdsource funding, learn more, and you can access them. I'll just let you write that down if you want to write it down. www.esssmallbusiness.com.au/crowdsourced funding/learn more. If you never got it in time, please send me an email that I'll talk about at the end. So, do you want to know more? You could obtain a copy of the white paper which we've produced on crowdsourced funding equity raising, which summarizes in a bit more detail than what I've been able to do in this presentation today. All you need to do is go to www.esssmallbusiness.com.au and you'll be able to obtain that free article on crowdsourced funding equity raising to give you more information about how this exciting process for small businesses and medium-sized enterprises works, so that you can think about how you might be able to raise some capital to assist your business. If you need assistance on the identification of an accountant, you can send me an email, peter@essbiztools.com.au. And obviously, if you've got any other questions about any aspect of what we've talked about today on crowdsourced funding, you could send me an email. So good luck with the implementation of getting your house in order. And I was starting to say implication, and it is an implication because you won't be able to do anything with crowdsourced funding unless you accept that your house must be in order. You've got to be able to produce the business plans, budgets, cash flow forecasts, and you really do need a vision that the senior leadership team and the directors have all signed on to. This is what we are going to achieve over the next 3 to 5 years, with a fairly important caveat, of course, that you need to raise this capital so that you're able to take advantage of what I believe is the biggest financing change for your segment of the business community in the last 35 years. If you can think of some questions later on, and I acknowledge that we are doing a live feed of this webinar to Facebook, and welcome to the people watching us there. If you would like to ask us some questions later on, why not send me an email, peter@essbiztools.com.au. Our websites are there. ESS BizTools is primarily for accountants and business advisors. ESS BizGrants assists professionals to identify government grants that might be beneficial in your business. And the website that's been specifically prepared for small and medium-sized enterprises is www.esssmallbusiness.com.au, where we have information on crowdsourced funding, equity raising, but also on a wide range of other matters applicable to running a successful business. So thanks for being with us today. I hope you have a wonderful day, and I will look forward to talking to you at some time in the future. Have a great day. Goodbye.